Hey, 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 good evening, good evening. Um, Happy Tuesday. It's Tuesday. Talks with Tanya every Tuesday, 7 p.m. Central Standard Time. So I'm going to play my intro video and then I'll be right back and we'll start our topic today. We're going to be talking about tax receipts versus acknowledgement letters and understanding the difference between the two correspondence. So I'll be right back. All right. Now, so this topic is very, very important. I got a lot to go over tonight, so I'm gonna, keep pushing through it. As usual, if you have any questions, you can email me, or you can email me. Let me put my email address up. You can email me at nonprofitsgetconnected@gmail.com. If you, want to ask some questions in the post, you can ask them in the post or on the page, and I will respond to you. So let's get started. Let me share my screen. All right. So today's topic is on tax receipts versus acknowledgments. And so I'm going to start with going through pretty much what a lot of this information I'm pulling from the IRS publication, and I'll give you that publication number at the end of this video. But one of the things you want to do is, it's just like any other, if you're working for a government agency or anything, what the IRS does is they give you the rules and the guidelines, but they allow you as the organization to come up with your processes, your timing of your acknowledgement letters and things like that. So the first bullet is donors must have a bank record or written communication from a charity for any monetary contribution before they can claim charitable contributions on their federal tax returns. So we'll get, as I go into this, and I've got more posts, so some of the things I may repeat, but I repeat them because they're important to this process. And understand that it says the donor must have a bank record or written communication from a charity for any monetary contribution. So it's twofold. I think a lot of nonprofits feel that it's actually their responsibility to make sure that the donor has this tax receipt. Well, yeah, you want to give them that tax receipt. You want to say thank you to them. But it's actually the donor's responsibility to make sure when it's tax time that they have these documents in place when they're trying to claim these contributions. Donors are responsible for obtaining a written acknowledgement from a charity for any single contribution of $250 or more. So notice that, and this is coming directly from publications. This is coming from the IRS. Donors are responsible for obtaining a written acknowledgement from a charity for any single contribution of $250 or more. And what that means is, it doesn't mean that you shouldn't give them one for a donation under $250, but as far as the IRS recognizes a donation $250 or more to claim on your contribution. So a lot of times donors will collect acknowledgement letters they want one for $5, they want whatever they give, they want. I would rather err on giving them all the documentation that they need or ask for, as opposed to them deciding and then they go do their taxes and the IRS is saying, well, we need all of this documentation. So it's best to just give them, but this is an IRS requirement. It's best to just decide. Some organizations will follow this to the nail, but I personally, would just, the process is easier for you if you just generate acknowledgement letters for the gifts that they get. Let them decide which ones they want to give to the IRS or what they want to put on their tax returns. Charitable contributions are required to provide written disclosure to a donor who receives goods or services in exchange for a single payment in excess of $75. So let me explain this. Let's say, for instance, you have a membership organization and your membership may be $50 a year for your membership. So for instance, I have a membership with my nonprofit. It's $35 a year. So basically what this statement is saying is that your, hold on a moment. What it's saying is that if, for instance, if a donor pays $35 a year for their membership, it's the $35 is insubstantial with the IRS, because for most purposes, the donor, the benefits that you're giving to that particular member is probably far exceeding the $35. So let's say, for instance, you're giving them, discounts on events. You're giving them tickets to discounts on their tickets to certain events. You're giving them a newsletter. You're giving them, they get, every month they may receive something from you. So the value of those items, those goods and services, probably will exceed your that person's membership fee. That's $75, up to $75. Now, if it goes over $75, then it still depends on, then you get into receipt amount versus what they paid for their tickets and things like that. So, all right. So written acknowledgement requirement. An organization that does not acknowledge a contribution incurs no penalty. It's the donor's responsibility to obtain written acknowledgement. An organization can assist a donor by providing a timely written acknowledgement contribution. The thing with this is that that's not a written rule with most organizations. It's always flipped. The donor feels that, okay, if I give a donation, it's the responsibility of that organization to give me a letter. Well, it is. And the process is, as long as the organization is following the guidelines of the IRS, they can decide that they don't give you a letter for a $5 gift. The organization can decide that. However, a donor feels differently about that. A donor feels like, nope, if I give, I should be getting this letter. So that causes a lot of confusion between the donor and the organization sometimes. Like, I had given an example of, I had given a donation, but like my donation was over $250. So in that sense, I should have received a acknowledgement letter. I should have received an acknowledgement letter, but I didn't. So I just reached out and asked, could I get one? Can you send me one for my tax purposes? So it kind of works both ways, but when the donors get into the higher amounts, they actually, basically they feel like it's your responsibility to make sure that they get this letter. All right. So here are the requirements. What should be contained in the letter. this is what the IRS says that you must have in the letter: the name of the organization, the amount of the contribution, a description, but not the value, and I'm going to explain that, of non-cash contributions, a statement that no goods or services were provided by the organization in return for the contribution, if that was the case, and a description and good faith estimate of the value of goods or services, if any, that an organization provides in return for the contribution. So let me explain that. Let me explain the piece about the non-cash contribution. We call it gift in kind. So let's say, for instance, someone gives you, they donate some furniture to your organization, or they donate some type of item, even, gift cards, or they may donate blankets or book bags. It's an item that they're donating. What happens is, in a gift in kind, when a donor donates an item to you, you are not, as the organization, it is not your responsibility, nor should you determine the value of those items. So those are non-cash items. The donor, when they don't make that donation to your organization, they must determine the value of the items that they're donating. So they may donate 100 book bags and say, well, the value of this is $1,000. They have to tell you that. You don't place the value on the items that they're donating, because when it comes down to them writing that off on your tax return, it's between the IRS and them. They're the ones who have to have that conversation with the IRS. The organization really does not get into placing the value on items that are donated. Once they do place the value on that, then you can issue them a letter that states, it has to specifically state in the line where you put the amount, estimated value by donor, or something like that. So you got to make sure that the letter is clear, and it clearly says that you have to, it clearly says that you're donating the value. This is the value that they've estimated. It has to clearly state that, and so that they know that you did not make that, you did not do that. So hold on. Let me go to the next. All right. So IRS compliance, tax language and policies. All right. No goods or services were provided in exchange for your contribution. So what this is this is the tax language that will go in your acknowledgement letter. Now, when I'm saying tax receipt and acknowledgement letter, the IRS uses acknowledgement letter a lot. Here's the difference. Here's the main difference. Tax receipts are just that. You can, like, say, for instance, a donor purchases a ticket and they give a donation and all that. So it's basically a receipt that you give them for their donations. An acknowledgement could serve two purposes. An acknowledgement could be, thank you for your donation. You could write a nice letter, and then at the bottom, you put those required items in there, the name of the organization, the amount, and all of that in the bottom. But this tax language has to also go into that letter in order for it to be used as a acknowledgement or receipt for their donation to give to the IRS. So this is, no goods or services were donated in exchange for your contribution. So what that means is, these are strict cash donations. So if I give $500 to an organization, and in return, I don't get anything in return for my donation, I'm giving a strict $500 donation to that organization. This is what should be at the bottom of my tax letter. No goods or services were provided. This is the only way I'm going to be able to get full credit for my $500 donation on my tax return. This statement has to be in there, okay? The next thing is a disclosure statement, and that's provide the donor with a good faith estimate of the fair market value of the goods or services. Example, a donor gives a $200 donation in exchange for a gala ticket with a fair market value of $40. That's $100 minus $40 equals $60 tax deductible amount. The donor can only deduct the portion of the donation that exceeds the fair market value. So let me explain that because this gets kind of confusing. So I purchased a ticket to a gala, $100 ticket. The fair market value of that ticket is $40. What the fair market value is, that's going to include my plate, my dinner. It may include a raffle ticket. It may include whatever the cost to that organization for my ticket, for me, for a $100 ticket, whatever the cost that's associated to that, it's totaled up. And it's usually, you usually can get this amount from the event planner. Like if you are doing a plated dinner or something like that, usually they'll be able to tell you, okay, it's $25 a plate. In this case, it's $40 a plate per person. That has to be deducted from my $100. So I can't claim a tax credit on that $40 because I'm getting goods and services for that amount. I'm getting a dinner for it worth $40. So I can't claim that. So when I issue the tax receipt, the acknowledgement letter, considered the receipt for their tax purposes, when I issue that, at the bottom of the letter, it's going to say ticket purchase, $100. It's going to say estimated fair market value, $40. It's going to say tax deductible amount. The tax deductible amount is going to be $60. That's what the IRS is going to use. That's how much that particular donor can get credit for on their tax receipt. On their tax return. So that has to be really clear. Some people get confused about how to calculate that because it's like when I'm talking to the event planners and things like that, I ask them, what is your receipt amount? They'll tell me the receipt amount is $40. So I already know that the donors are paying, the event attendees, they're paying $100 to go to this event. So I already know that $40 of that they cannot deduct on their taxes. So the receipt amount that I'm going to put in is $60, and that's what I'm going to put in the letter, that this is the amount that's allowable by the IRS that's tax deductible. So it gets confusing, but once you know the formula and you do it, it's very important to do it because in some cases that's a small amount, but in some cases you may have, a sponsor that pays $5,000 for a sponsorship. Well, there's a value they're getting from that sponsorship, and the value that they're getting from that sponsorship could be they're going to get their name, and they're going to get their logo is going to go on the website. They're going to get their name on the sponsor roll. They get a plated dinner, and included in that $5,000 maybe 10 tickets for they can bring 9 other people with them. So all of that has to be deducted from that $5,000, and whatever's left, that's what they can write off on their taxes. So like I said, it's really simple, but it's an important piece. And most donors that that have been giving for a while understand that piece, and they understand because actually once you give them that tax receipt, like I said, it's between them and the IRS in terms of we provide the receipt that's correct. The IRS will not give them that credit unless they see that tax deductible amount, because that's the only amount that they're going to be able to put on their tax return. Okay, acknowledgement timing. So a prompt acknowledgement reflects well on an organization's business practices and appreciation of a gift. So, if I give a donation, and now events, it may take a little bit longer, but if I give a donation on a Tuesday, and the expectation is that, very soon after that, I'm going to receive an acknowledgement letter. Most experts agree that the letter should be ready for mailing out the door within 72 hours of receiving the gift. So this is something that your organization has to determine what is feasible, what's a realistic time period. So you got to look at your process. You got to look at the date that you received the donation, the date that it's deposited into the bank. What other processes does it have to go to before it gets to the development coordinator to be processed for that letter? You got to think realistically. 72 hours. So you could look at this two ways. Most people will look at a straight 72 hours, and that's not necessarily feasible because most organizations don't operate on a schedule of 72 hours around the clock. So when we're talking 72 hours, we're talking 8-hour days. So you have to make the decision, like the organization I work for, the CEO was like, look, I know that, if things happen, it's a process or whatever. He says, I'm good with 30 days. As long as they get it within that month that they've given a donation, I'm good with that. Most donors, the expectancy, and especially now that we're in this pandemic, a lot of people are more lenient about that. So, it's, a lot of people, the time period may be, lengthier because of the pandemic that we're in. All right. Consider incorporating email acknowledgments as a supplement. So this could be an easy process it depends on your system. It depends on your donor database that you're using. If you have this option, if you have email addresses for donors, you can actually set up an email process where you can email their acknowledgement letters to them, which means it's probably going to be a quicker process because it's all in the system, and you don't have to print letters out, get them signed, put them in envelopes, put postage on the envelope, take it to drop it in the mailbox. So it saves time if you have the option with your software to do this. Have a plan in place if the signatory is going to be inaccessible for a prolonged time. So in most shops, it's the head of development, like the director of development, that may sign the letters. Sometimes there are situations where the CEO may want to sign letters. Sometimes it's a situation where the person who managed getting that donation may want to sign the letter. I suggest you have one person that signs the letters all the time, and then you have a backup. Because what happens is you want your donors to be familiar with who is signing the letter, who they're communicating with, and they're seeing this person's name, and they're expecting to see this person's name. So when you start having 4 and 5 people sign the different letters, it starts to get unmanageable because, now you got once it goes to them for signature, now you got to gather all the letters back up and prepare them for mailing. So it's probably best to have one person. In some situations, there are some heads of departments that are fine with electronic signatures. Unless you have, now I worked for an organization that had a machine. I can't remember it was some kind of signature machine. However, the machine, what they did, they programmed the CEO signature into this machine, and there was actually a real live ink pen in the machine. And once you put the acknowledgement letters in there and you run the acknowledgement letters through, it would sign the signature with an actual ink pen. So it looked like a real signature. So, but that's an investment. I don't know how much those machines cost. It's an investment. It's something that you would have to, look into the pricing of it. But, then you have, you had some heads of departments that want to personally sign them, themselves, and want to make sure that every letter is signed. That could become a little bit much, especially during the time that we're entering now, during the holiday season, when donations are increased. You've got a larger volume, and at some point it's impossible to get all of those letters signed in a timely manner. So a lot of times during this heavy season, the holiday season, you can drop in an electronic signature, or you gotta be, you gotta make sure that the CEO or whoever is signing these is going to be around. Have a conversation about when they're going to be around, how long they're going to be gone for the holiday, or things like that, so that you can plan that piece of it. So, acknowledgement signatories. Ideally, the individuals signing acknowledgement letters will have a personal relationship with the donor. However, appropriate signatories include development of program officer. If the gift was made in response to an email, letter, and/or volunteer solicitation, the individual who made the request, an organization staff leader or board member, and an individual who will benefit from the gift. That's a lot of people. So, like I said, you want to streamline who's actually signing the letters, and you also want, because in the letter it's going to have their title. You also want to be, conscious of the title of that person, because a lot of people like to see president and CEO that signed their letter, or a senior vice president or something like that signed their letters. Here's a great idea that that can happen. If in the process of signing letters, one of the great things to do, it's always nice to add a personal note or letter. And let me tell you, years and years ago, when I first saw this happen, I was like in shock, like, oh my God, he's writing over the letter, and just writing over the letter. And as time went on, I realized that was a good thing to do, because in this industry, because your acknowledgement letters are going to be basically this. They probably, if they've given over and over donations over and over, they're going to have the same text in every letter that you send them, because you're not going to create a new letter every time you send out a donation. An acknowledgement letter. You're not going to create a new letter with new information in it. So it's going to be the same letter over and over, signed by the same person with the same information in it, except for the information you got to change, like the date of the gift, the amount, and things like that. So it's always nice. A person would know that someone actually saw their letter, paid attention to it by putting a little note, like up in the white space of the letter, a little note just saying, we really appreciate your donation is really working towards helping us build our program. Something, just a little short note that's handwritten on the acknowledgement letter goes a very, very, very long way with a donor, because it makes it personal to them, as opposed to them just receiving a blanket letter every time they give a donation. It makes it personal to them. So, acknowledgement salutations. A plan to streamline salutations can prevent having to do letters, which can have a negative effect or turnaround time for acknowledgments. So, this is a process that you need to discuss with your team and set it up so that it's basically the same thing. It's pretty much building standards into your process. And one is have preset primary addressee and salutations. So let's say, for instance, nowadays you have to be conscious of relationships and partnerships and things like that. So you might go back and forth with, so here's what I did. I made a decision to remove all titles off of all the donors. So years ago, when I first got there, they were using Mr. and Mrs. and Mr. and all of that. And so it became difficult, because now you gotta look at, every time you send out, do letters, or you send out an email address or email or whatever, you're looking at the relationship. You got to look at the relationship harder, and what type of relationship it is. So, even, when you have a male-female relationship, sometimes the wife doesn't want to be called Mrs. She wants to be called by her first name. The husband may not want to be called Mr. So you'll find yourself going back and forth with that. Then when you have a partner relationship and you have two males, then you're struggling with, do I say Mr. and Mr. so-and-so? Or do I, it's just easier to use first names. If you have a partner relationship, it's easier to use the first names of the individuals, because you get into trying, you get in your own head and trying to figure out, okay, is it, so now, as I don't know if you guys have seen this on maybe some emails that you've sent, people are identifying how they want to be identified, and you may see he, him, his, or she, her, hers, or something like that. That's to identify, how they want to be addressed. So it's just easier for me to just drop the titles and just do first name, last name, and be done with it. Establish a uniform form style for non-first name salutation. All right. So basically, you're establishing a uniform. So what this is saying is that, let's say that you don't use the first names. Then you've got to establish another primary addressee and salutation that you're going to use. So like in the salutation, are you going to use Mr. Smith, or are you going to use Mr. first name, last names? In the salute, you got to determine how you're going to use that. Set it up in your system and use it as a blanket. You don't keep changing it. Just use that the way that it is, because you get back and forth into, okay, one time they called me Mr. Smith, they're calling you Mr. John Smith. A lot of people will think of that as an error in your letter, and not that maybe this time you decided to use this. You can set up salutations. So even if, let's say for your events, you want to call everybody just by their first name, you can set up a salutation where it just puts in the first name. Hey, John. Hey, Lucy. Hey, hey, Peter, whatever it is. You can set up an event. So whenever you're doing events, this is a salutation you use. If you're doing acknowledgement letters, these are the salutations that I'm going to use for acknowledgement letters. And the reason you're doing that is because in one way, you may want to be formal when you're sending out the acknowledgement letter. And then for the events, you may want to be a little bit more personal with them because you want them to be all, you want it to be all nice and fluffy and, really reach them because you're having an event and you want it to be a fun thing. All right, periodically conduct a name review with the fundraisers. So the reason this is important, like the people who are actually talking to the donors, the fundraisers, they're out there, they're talking to the people. What happens is they're having those conversations, and through those conversations, the fundraiser may find out this person is getting a divorce, or the fundraiser may find out that this person went back to their legal name or their maiden name, or something changed with the way they want, or maybe they moved or whatever. The fundraiser is your first line of information with that donor because they're the ones having those one-on-one conversations. So, periodically, go over, with the fundraiser, has anything changed with any of the donors? Technically, the fundraiser should be able to go in and update the change, but you still want to know just in case a change comes up, and you weren't aware of it, because what could happen, you might figure it if you didn't know about the change, you might think it was a mistake and revert it back to the old name. So you want to have those conversations with your fundraisers. So I'm pretty much at the end, and here's the resource that I wanted to give you. The IRS publication 1777, Charitable Contributions and Disclosure Requirements. So this is the publication that talks about the donor letter, the acknowledgement letters, the IRS requirements. It talks about all of the information. Download this. It's good to have in your files in case you've got questions. And there's a whole lot more in there. And so next week, I'm going to go over record keeping. So in record keeping, basically what I'm going to be talking about in record keeping is, do you keep copies of the tax statements? How long do you have to keep information? Things like that. So I'm going to be talking about that next week. So this is, like I said, this is a really important topic. And it really is huge on donor stewardship. And you really want, when I was in the donor coordinator position, I would make a copy of every letter I sent out, because what happens is you get a donor and they lose their letter. Or you get a donor that said they never received their letter. It could work two ways for you. So for me, it worked those two ways. So if a donor, would contact the office and say, I got to meet with my tax accountant next week to do my taxes, and I thought I had the letter and I don't have the letter, and can you send me another letter? So I can go in the file. Usually I'll do it by month. Go in the file, and you can always look up their donation in whatever system that you're using to find out what month it was in. And you should be marking it in the system when you acknowledge that gift. So I always go back, find out when find the letter, and just email them a copy of the copy that went out to them, the same exact copy that went out to them. And the reason why I do that is because if I've got to generate a new letter for them, the new letter is going to have the current date on it. Okay, it's still going to have the information, but what happens is, let's say for instance that donor does have that letter, and I'm not saying that donors are, being untruthful or anything like that, but you want to avoid giving them a second letter for the same donation. So that's one of the reasons why I would keep copies, and then if they lost their letter or whatever, it's just as easy for me to just give them another copy. Here's another thing. If you had to reissue a letter to a donor, the best thing that you can do, because like I said, when the donor goes to the IRS to do their taxes, it's between them and the IRS. It's really not your problem or issue to verify and things like that. Once you've given them an acknowledgement letter for their donation, they are able to, it's up to them to, it's between them and the IRS, what's deductible, what they're presenting. But one of the things that you do want to be careful of is if you have already issued a donor a letter and they come back and say, well, I lost that letter, I need another letter. If you had to regenerate a new letter, sometimes, I would see the letter would say reissue. It would just say reissue, maybe above the date. That still doesn't, that part could be wiped out. So that still doesn't take care of that situation. But what it does, so what I would probably do in the body of the letter, I would just say, once again, thank you for your donation. Here is your reissue statement for your donation on ABCD date in the amount of whatever that amount is. So that way the donor, the IRS or whoever the accountant, whoever they're presenting that to, can know that letter has been reissued to them. And it's a second letter that they've gotten for that donation, because, you have people, I'm not saying that this happens, but in any industry, that's, you're getting double credit for the same donation. So that's all I have tonight. I hope this helps. And I, as I said, this may not be, you may not think that these things are important right now. However, in the future, if you're like starting a nonprofit or thinking of starting a nonprofit, you will find that this back end piece is so important to you building your nonprofit. And like I, a lot of new startups don't think in terms of that. I made a post today that you may want to go back and look at, and it's basically the pros and cons. Like if you're starting, a nonprofit and you want to get your 501c3 status from the IRS, and it's the pros and cons. So there's what they call a DIY, a do-it-yourself 1023 easy form, which is a short form that you can do. The short form is basically if you are a new nonprofit and you're basically stating that I am not going to exceed $50,000 in the next 3 years in my nonprofit. So what happens is a lot of people, and I'm probably going to talk more about this starting in January, talking about starting a nonprofit and things like that. But what happens is when you use that short form, the questions are very simple. It's a very easy form. And it's much cheaper. It's like $275, I think. So it's much cheaper. But what happens in the long term is a person does not really go through the real process that they need to go to start a nonprofit organization. And so they start out easy, and then they get down the road and find out, oh, I got to do this. I got to do a 990 form after a certain amount of time. I got to do this. I got to do that. So if you take a look at the article just to read it, like I said, I'm not talking against doing the easy form. You can do the easy form because the IRS, I even called, when I did mine, I called the IRS and I asked them about the difference if I were to do the easy form. And I said, there's no way I can know that if I'm going to get, at that time, I think it was 40,000. I said, there's no way I'm going to know if I'm going to get this amount of money. I don't know if what's waiting for me. Next week, after I file, someone may come and give me a $40,000 check. And the lady that I talked to, she was like, don't even worry about that, because we're not going to go back and say, okay, you know, uh, two years down the line, you got this money. Now we want you to go back and pay the fee. Now that was years ago. I did my 501c3 in 2015. That was 5 years ago. I would have to check now to see if that still is the same process. I don't know if they will go back on you, but I will check that. So that's all I have for tonight. If you have questions, please reach out to me. And, I'm hoping that this is helping someone. These videos will be saved. And you can always come back to this page and look at the videos, because you might, like I said, you may come back 6 months from now and be like, oh, wait a minute, she did a video on that. Let me go back, because now I'm dealing with this. The videos will be saved on the page, and they will also be saved in my YouTube. And I'm going to have to put my YouTube up here. I think it's under my name with subtitle Nonprofits Get Connected, Tanya Brewer Jackson, and Nonprofits. So you can find these on YouTube also. So I will see you next week. We'll talk about record keeping, and have a good evening.